there's a lot of focus on Canadian housing right now, just because the scale of the problem is so big that now government legislation has been forced to adapt to it. So, first thing is the government says, okay, you can do it. Then we start to see planning and zoning come into play. And then there has to be financial products designed around those to support them actually being built. And that's what we're trying to do.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Nick and Dan are hosts of the Canadian Real Estate Investor Podcast. Nick is a mortgage agent and Dan is a real estate broker. Gentlemen, welcome to the show.
Thanks for having us. Happy to be here.
Thanks, Sam. Happy to be here.
Absolutely. I'll let one of you guys take this question. It's a question I ask every guest who comes on the show in 90 seconds or less. Where did you guys start? Where are you now? And how did you get there?
We started, we're both Ontario based guys. So that's the largest province in Canada. We got to know each other about 3.5, 4 years ago through a real estate deal. I slid into Dan's DMs. He was already an investor. I was already an investor. We came together on this deal. Since then, we have developed a great partnership, have started a podcast, have created a bunch of content together, has started a few other companies that are focused on providing debt, equity, and strategic advice to investor clients, as well as buying and building a fairly substantial and growing portfolio ourselves.
That was good, actually. That was really good.
I think that was less than 90 seconds.
You did it, man. That's awesome. So give me a little bit more color maybe on how you guys partner up and what different parts of the business that you guys handle.
Yeah. So, in Canadian real estate, I think, and if you look at the way that commercial advisory shops are in real estate all over the world, is really ends up being like a full scope or full service solution. So, when you're doing sophisticated transactions, you often need somebody who understands the debt, the capital structure, fundraising, et cetera. And
Right.
so, if you look at institutional quality real estate shops, they're providing these services to institutional quality or institutional size customers. And we really focus on providing that institutional quality of service to sub-institutional investors. So there's a mid-market, and Nick describes this as the missing middle for funding, or the missing middle for investment sales, where, maybe let's say your 2 million to 50 million deal size is really completely underserved. And so our goal is to really provide the world-class services that, the people above that 50 million line get, and really focus it on that middle of the market. And that comes with a lot of an analysis. And then that kind of spilled over into the podcast. And what we do is investment sales. So we sell properties, we provide advisory services for purchase and sale, but we also provide debt and equity, which is, again, really different capital considerations for individuals who are in that middle market. Like the big lenders, Canada's banking system is very oligopolistic. So big lenders like big companies, and they like extremely small company or small investors. They don't like the guys in the middle.
We do.
You do like the guys in the middle. I like that. I mean, carving out your niche inside of that, I'm sure it has its blessings and its curses. What are some of the reasons maybe the bigger shops stay out of it? And then how do you find opportunity in that space?
Yeah, I think some of the bigger shops stay out of it for the simple reason that there's not enough juice to squeeze in there, right? They're focused on the larger apartment buildings, that actual Class A commercial office space that the small cap investor, the mom and pop investor, probably never touches, right? They stick to the duplexes and the triplex. That's where we started, and that's where we still live a lot of the time. And on our personal investing strategy, through that, we've been able to come across a number of off-market opportunities and actually build relationships with these smaller developers, and smaller developers would still be large compared to the person that's built a few infill developments. But basically, to answer your question, how do we find the deals and how do we find the opportunities? That's just through networking, which networking and building that community, which the podcast has been a major help for. It's shocking. I mean, Sam, this as a podcast host and creator yourself, the doors it can open when you're putting out good, free, honest information without really much of an agenda. We've got, first time home buyers that are probably a few years away from buying their first property, their first investment in their early 20s that are diehard listeners. We also have fund managers and billionaires that listen. So we've created a wide range, and through there we've been able to pull opportunities where we see them. And Canada is a small country, and once you start to look at it from a 30,000 foot bird's eye view, there's really only so many players that we can get involved in. So it's been, as we've grown, the opportunities have actually begun to present themselves more and more.
Love it. Absolutely love it. Let's talk a little bit about where you guys see the market right now and how investors should be positioning themselves for the next, call it 12 to 18 months.
Yeah. So I think we're in a bit of a risk on market. I mean, we know that I think the Wall Street Journal recently came out with a report that rents in the U.S. have been falling for 6 consecutive months. First time that's happened in the past 5 years, right? So that's a bit of a headwind, right? There's a lot of headwinds right now, and so we have new interest rate environment that we're settling into. In the past 20 years, interest rates have basically been going down, and so capital appreciation, more credit entering the market, it's not going to push prices up that much, and we're seeing downward pressure on rents. And we're also seeing housing affordability. If you look at data from the housing affordability monitor from the Federal Reserve, I think it's the St. Louis or Atlanta Fed that puts this out. Housing affordability is as bad as it was or worse than it was prior to the global financial crisis, so 2007-ish, let's say. And so those are all headwinds on house prices, and housing is probably the biggest, the most entry-level investment for real estate investors. Now, that being said, I mean, prices could come down, which means yields could go up even if rents are coming down. And so it's going to present a lot of opportunity for young real estate investors, probably once in a lifetime real estate investment opportunities for millennial real estate investors, from my perspective. So what I would say to people is don't get too excited, exercise caution, be liquid, be responsible with your personal finances and your financial goals, and really focus on buying the right thing and picking your market thesis. You got time here. Real estate, when cyclical events happen in the real estate space, when credit cycles unwind, the bottom tends to be very long. It's not going to bounce off the bottom, and it's not like a binary thing where it's down and then up. It's down and then it stays there for a while. You got lots of time. So really think about making the right investment and learn as much as you can, evaluate, and really analyze and do the right deal.
I think that's really sound advice, because as you look back to the 2008 crisis, I mean, there were deals still to be had. Shoot, man, all the way into 2015, it was still a really good time to buy, which is kind of wild to think about. I mean, we were well into recovery by 2015, but I mean, I go back to looking at stuff we were buying at auction in 2015, and I'm like, what in the world? It was on sale, on sale. We didn't have any stinking idea that was the case. So I really appreciate your advice there. Dan, tell me a little bit about what you guys are doing with, as you called it, Nick, the missing middle funding, how that directly corresponds to missing middle housing.
Yeah, it is interesting. I mean, the reality is the project size definitely directly correlates to sort of like that quality of service, but also the gap in the service that a lot of people are seeing in the market right now. So missing middle development is a huge thing in Canada that's, and it's very similar to the US, happening as a response to the shortage of housing that we have in a lot of major markets. And you see this in a lot of major metropolitan areas in the US. What the challenge is that, in the US, you have an exceptionally well cultivated capitalistic banking system. And in Canada, we have a very oligopolistic banking system. So I think at the peak of before the financial crisis, you had 2,000 financial institutions. We have 6 major financial institutions, and then maybe like 20 or 30 non-bank financial institutions and a couple of alternative or B or monoline lenders, right? So not a super well developed capital market, let's call it. And so the middle of the project size. So again, a lot of these institutions, they like low exposure or low risk clients. So clients who they can diversify, they can spread their risk across 10 different individual homeowners, as an example. They could lend a mortgage to each of us on this to buy our primary residence, or they can get into with very sophisticated customers and syndicate into debt deals with, spread the risk across multiple different lenders on a large institutional deal. They don't like what's in the middle. And so one of the reasons the missing middle isn't exceptionally well developed in Canada is because the capital markets doesn't support it. And so one of our big primary goals is to provide missing middle capital solutions to help provide missing middle housing. And like we're on the forefront of our political environment, our policy environment. The housing crisis in Canada is so bad that it will likely be legal to multiplex every house in the country within the next 5 years. That's the direction we're heading politically, because the the current system, it can't sustain the level of immigration that we're at. Like our population is growing by 1.8% on an annualized basis.
Wow.
Crazy. Yeah. Yeah. So like, and so, we just can't sustain that. And so we need missing middle housing, and it's not like once the policy environment catches up, you're going to have a ton of demand for it, but then the credit environment and the construction environment needs to support it. And that's where the kind of the next couple of opportunities and phases are in markets that are absent of this missing middle housing.
How do you, with limited lenders, how do you guys then go out and pair up your borrowers with lenders that want to fund this middle missing market? I mean, if you said only 6 national banks, like who do you actually work with that wants to get these deals done?
That's the secret. No, but I mean, honestly, like we have 600 capital sources. So we're going to sources outside of Canada. Like we have a deal now that we're working on with a large foreign exchange bank as an example. A lot of foreign banks are looking to get exposure to Canadian real estate. And I don't know if you know this, but our federal government just completely banned foreign purchase of real estate. So for 2 years, no non-Canadian can purchase real estate in Canada. So, and this is really complicated so this is really complicated the way that people want to invest and get exposure to Canadian real estate. The problem is a lot of these groups still want to get exposure. So how are they doing that? Well, they're lending. And with the way the interest rates are right now, your yield is probably the same getting debt exposure to real estate in the Canadian market as it would have been buying income property a year ago or 2 years ago. So, I mean, it's cool to see because we're picking up the phone and calling lenders from all over the world. And there's a huge appetite to lend in Canadian real estate right now. US lenders as well.
What's that, Nick? I'm sorry.
I was even going to say, just even internally as well, Canadians do have an obsession with housing. Dan and I always joke that it's Canada's national sport, and it's turned into an extreme sport. A lot of the housing stock, the upper echelon of the housing stock in the 2 major markets, Toronto and Vancouver, are actually owned free and clear. So there's no mortgages on them. There's also a massive transfer of wealth that we're seeing with the baby boomers kind of turning over their wealth to their kids through inheritance or early inheritance or anything like that. So we do see, even internally in Canada, a large appetite for private lending for people to invest in real estate across the country. We have people that are trying to take their capital from Ontario or Toronto, which would be an equivalent to a New York or Chicago or an LA, a major hub, and deploy that capital in a much more secondary or tertiary market throughout the country. So, for instance, like an Ohio or a Mississippi or anything like that. And I'm probably not giving justice to those examples, but so I mean, we are finding, as Dan said, we had calls with guys that are putting together a mutual real estate fund with us that are going to be finding capital from all over Europe. So there's a lot of focus on Canadian housing right now, just because the scale of the problem is so big that now government legislation has been forced to adapt to it. So, first thing is the government says, okay, you can do it. Then we start to see planning and zoning come into play. And then there has to be financial products designed around those to support them actually being built. And that's what we're trying to do.
Got it. I'm really curious, just from a strategic nuts and bolts kind of level, how does one go out and find lenders from all over Europe and package them up and do what you guys are doing? I mean, do you just hunt LinkedIn? I mean, I know this is a network that you've built over time, but I'm really curious how that's done. Like, for me, that sounds like a hill that I just couldn't even possibly fathom climbing.
Yeah. So Google is where we start, but then I mean, Chat GPT actually is even like, I would literally put like, give me a list of lenders from X country, right? And we'll just call them. Some of them are like, we've never lent on a deal in Canada, but sure, send us something, and we add them to the lender list, and lo and behold, they look at something, and they're like, yeah, we would actually lend on this. Like, sure, why not? And so there's that. And then Rocket Reach would be like the biggest thing. So LinkedIn is good, but then Rocket Reach is like a paid service, no affiliation, by the way. Like I wish I had an affiliation because it's super expensive, but
right,
you can get CEOs, like it's like Google, but you can get like CEOs emails pretty easily. It's cheaper than the LinkedIn premium, and I find CEOs and whoever's are typically more likely to respond to an email than a LinkedIn DM, let's say, but LinkedIn's another way as well. So yeah, that's pretty much it, honestly. Like it's not super complicated. It's just research that most guys who are, consider themselves C-suite financial services guys don't want to be doing, right? So we do pay certain people to get lists and whatever over time, but mostly it's harder to find clients, it's harder to find developers than it is to find lenders right now. The capital costs are high enough that lenders want to be making that money in a lot of cases, especially small lenders. Like they want the yield, and developers can't make the numbers work with the expensive capital costs. So
right. What were you going to say, Nick?
Yeah, I was just going to say that, outside of the kind of traditional cold outreach that everyone in real estate or sales should be very familiar with, that Dan's mentioning, the inbound system that we've built, and again, Sam, this being a podcaster yourself, the inbound system that we've built for people to, people don't want to do business with you or lend you money or get into a construction project with you if they don't know anything about you. What we've done is we've put ourselves out there to such an extent that people know that we don't have an agenda, or they know what our agenda is, and that's to bring more housing units to market, right? So I think that's played a big role as well. Not only does it bring inbound investors, and actually that's how we got the Austrian guys. That was just a friend of a friend who listened to the podcast and sent these guys some of the episodes. They listened, and a week later we were on calls, and now we're signing NDAs a few weeks later. So I think that not only does it legitimize us a lot, but it just creates that little bit of trust that takes so long to build between business partners.
It sure does, man. Yeah, you're absolutely right. You hit that on the head. Being a industry thought leader is a very powerful thing to do, because people get to know you. It's funny. I've had a lot of people tell me that when for the first time we talked, like, man, I already feel like I know you.
Yeah.
I had that happen on a call today.
It's a weird thing. It's funny, but yeah. Or like, oh, your voice sounds so familiar. And it's like, yeah, okay. Wow.
Well, thank you. I appreciate that.
Yeah.
Dude, that's awesome. I love that. And I'm really glad that you reinforced that point, because it is just so true and so powerful that you do have to put stuff out there. You do. I mean, I don't know what we're at now, 775, 800 episodes. And
wow.
Never brought a sponsor on. Not to say I won't, but it's one of those things that it's just free content. So very, very cool. I love that. What would you guys say is a potential solution? I mean, you guys are part of the solution right now in that you guys are handling the missing middle funding. You are assisting in getting that missing middle housing development taken care of. Is there another solution that comes to mind that you guys say, man, this could really help solve the housing problem that Canada is facing right now?
I think that there's a disincentive for investors to, like in Canada and in a lot of places in the States, it's the same thing. Capital appreciation is really driving in major investment decisions. A lot of people were buying because they wanted to get that alpha. They wanted to get the equity. They wanted to see house prices appreciate or the asset prices appreciate. And we need to get people away from that mentality. And I think increasing interest rates by 3x is going to help do that. You have to make things economically sensible. And so we've gotten to a point where people have an incentive to create more units in a lot of markets now. People want to literally because they need to, because in order to make the deal make sense, they have to add a unit to a building or add a couple units to a building or, improve the quality of the building to increase that yield. So to me, I think like the big glaring one was monetary policy was just like, you can't have interest rates at net negative for a decade, right? And so now we're entering into this new world of interest rates are going to be not exceptionally high, but they're going to be certainly higher than where they were for a sustained period of time. They have to be, otherwise we have way bigger problems on our hands. And so I think when like on a meaningful basis, if you are an individual and you think about, okay, I want to provide something of value to the world, provide a growth of an asset. So it could be adding a unit, could be, helping company onshore and building industrial property as an example. Some of that last mile, like you're seeing a lot of artisanal vendors, who need small industrial spaces as an example. Find a need in the world and solve it. And you can do that through real estate. And if you're doing that, you'll get compensated exceptionally well for it.
I love it. Gentlemen, thank you for taking the time to come on the show today. This has certainly been a blast. I do appreciate it. If our listeners want to get in touch with you, learn more about you, what is the best way to do that?
Yeah, so Canadian Real Estate Investor Podcast, you just search it on, if you're interested in the Canadian market, search it. We're on all the major podcast platforms. My last name is Foch, F-O-C-H, Daniel Foch. If you just Google me, it'll typically give you the social media platform that you're most likely to want to click on. So that's what I would recommend doing.
Yeah, go check out the podcast. We do cover, and it is Canadian focused, but we do cover a lot of real estate fundamentals, principles that apply to real estate investing, no matter where you are. So go check out the podcast. Again, my name is Nick Hill. I can be found just about anywhere at My Buddy Nick. So add me and we'll be buddies.
Sounds great. Gentlemen, thank you so much. Certainly appreciate your time today. Have a great rest of your day.
Thanks, Sam.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.